to the Big Skinny with me, Basenese, coming to you live from our studios in Brooklyn. That's right, we're live streaming every week, and we want you to join the conversation. So don't be afraid to chime in while we opine. We're doing an episode on the best of 2025, folks. That's right. We give you all filling, zero fluff, and we're going to go back in time since we launched this lowly endeavor of, I think it was March 6th of this year. We're 30 plus episodes in, and we want to let you know what we got right, what we got wrong, some of the best guests we've had, and everything else in between, because we think it's important, before we tell you what we expect for 2026, that we give you a reason to believe us, that we actually have a clue what the heck we're talking about here. So some have called us the Sports Center of Financial News. I'm going to take that, and we just give you the highlights, the information that matters, and we always do it in a regular format. The first top of the show is our rundown, where we distill down the headlines that you should probably ignore, the data that you should absolutely pay attention to, and the investment actions you should take to make the most of your time spent with us. Because let's be honest, we can have fun together, but if we make money together and have fun, it's all the better, and you'll be sticking around for future episodes. So without further ado, let's get to this week's rundown. All right, for this special 2025 in review and 2026 preview, say that 3 times fast, we're going to go through what happened at the beginning of this year. In fact, there was a lot of predictions, as there are every year. We're coming up on prediction season. In the next week or two, you'll start seeing mostly mainstream financial press talking about what the analysts think, what the billionaires think, what lowly investors think. You're going to have conferences, big tech conferences, CES, big healthcare conferences in JP Morgan. That's going to set the tone for the year. But I'm here to warn you to put too much credence in any of these headlines. In other words, don't be scared stockless, because let's rewind a little. And this is how Reuters started off the top of this year with their poll of equity analysts saying, hey, guys, global stocks not going to do so hot. They're going to have tempered gains in 2025. And let's see, what does tempered mean? Well, maybe around average or below average. Well, the average for S&P 500 is around 8 to 9% a year. And guess what? We had double that. So if you listen to the equity analyst poll from Reuters, you got screwed. You got scared out of stocks. But if we go down the list and we look at very well-known research shops and the headlines coming out of them, they said a recession is imminent and that our favorite tech stocks, we're going to get absolutely crushed this year. So recession imminent, tech was out. Guess what, folks? We got none of the above there either. But what about the billionaires? They're the smartest guys. They made billions making big market calls. And, well, I got to tell you, at the top of this year, they were pretty pessimistic as well. You had billionaire Ray Dalio warning that we're going to have an economic heart attack in America if we don't radically reduce our deficit. Well, I'm just checking. It's December 15th. We haven't done squat on reducing that deficit, and we have not had an economic heart attack. Well, what about Jeremy Grantham, another famous billionaire prognosticator? I don't know. What did he have to say? Well, he told Guru Focus that we're going to have a super bubble risk this year. No, folks, we have not had any of that. Yeah, there's a lot of talk about an AI bubble, but we're actually not in one no matter what metric you look at. So what's the point? Ignore the headlines. Don't give them any credence. Don't be scared stockless, because if we look at the data, you see, well, look, even ignore the headlines mid-year. Peter Schiff here saying in the middle of a bull market that it's really a bear market rally. I don't even know what that means. I don't think Peter knows what it means. He usually has 2 settings: be bearish and buy gold. That's it. That's Peter's go-to recommendations in the market. But what about, so predictions are worthless. Feelings aren't that important either. They don't really matter. We need to stick to the facts, and the facts underscore that there was plenty to be bullish about this year. In fact, remember, we showed you anything but the USA was a trade, and that was a bullshit. Yes, it was bullshit. Nothing but a bullshit. Dan the man, a little slow on the trigger today, but you remember we were being told in March and April this year to just get out of everything in the U.S., and we pointed to the facts. The facts underscore the fact that, no pun intended, 12-month forward earnings projections for US-based stocks were much higher than the rest of the world. I mean, you look at it here, you're getting 400% plus projections moving forward as we go into 2025. And the reality was, you really could make any prediction that was bullish this year and you would have been right. I mean, just look at this list here of the top performing investments of 2025. Nowhere to hide. I mean, look in the sectors, right? Tech is up, communication services. You go down the list, the only thing that was barely budged was real estate. But everyone knew that. No one was expecting to make a fortune again in real estate. But the overall S&P 500 as of today is up 16% on the year. So much for tempered returns. But here's this week's money chart. You didn't have to go anywhere far, but the winner this year for the best performance was gold. Gold mining stocks, in fact. You see, they're levered to the price of gold, and gold had a historic run this year. But I don't know. I'm not mad that I don't own much gold. If you looked at all the best performers that were elsewhere, you had semiconductor stocks up 60%. You had biotech rebounding up 30%, depending on which index. You had small caps even finding their footing again. And so, folks, the takeaway is really simple. Cybersecurity, IPOs did okay. Thing that shocked a little bit, a lot, Bitcoin. The worst performer for all the assets we track this year, actually down on the year going into the last 2 weeks based upon the recent pullback. So my point is this: there's always a bull market somewhere, and we're always going to be looking for that bull market. We're not built to be pessimists here. We're built to be optimists. And I don't know, I haven't really met any billionaire pessimists. Even Ray Dalio was optimistic in certain points, and Jeremy Grantham, that's how they made their money. So, folks, we're always going to lean towards where opportunity lies and find that for you. And those are the facts. We don't focus on predictions. We don't focus on our feelings. We just find the data that leads us to the winning investments. And we're going to spend some time tonight going through those big calls, bold calls that were right. We'll go through the ones that were wrong as well, because we like to be humble here and acknowledge when we make mistakes. But folks, I got to tell you, by and large, this has been a rising tide market, and a lot of the big predictions we made this year worked out. So without further ado, we're going to get to the best guess of 2025 that we've had on the show. And I'm going to bring in my partner in crime to help me throughout the rest of the show, because he started off as an intern at the beginning of this year, and we've promoted him all the way up to a regular contributor for not just one block, but now 3 blocks of the Big Skinny. Welcome in the Dodd Man. How you doing, buddy?
Dude, I'm doing great. This is the B block. I'm moving up in the world, Lou. This
D to
wonderful.
B, man.
You know,
it's
I
like,
remember those days of, just in the copy room, just checking mail, doing that type stuff. It's come a long way. And since how many months now? Just a few short months.
Yeah, man, I'm proud of you. 9 months in, and now you're getting promoted, but you're never getting to the A block, man. Unless you want to fill in for me 1 week, then have at it.
No, that's all right, man. You got that.
So listen, man, the whole thing, we started this on a whim, right? And some confidence that we could do something that was interesting. And that was also predicated on the fact that we know we don't know everything. We got to bring in some really smart guests, and we've had them in, by the boatloads here. So let's go through some of the best guests. And this is not just me picking, this is you as well, because you're an investor. You hear and listen to a lot of other people drone on about the market, some boring, some captivating. We're going to go through some of these guests that really delivered the information, the insights, and the investment returns for the large part.
Let's do it.
Yeah. Unlike my birthday, you didn't prepare any special envelopes, though. That's good. We don't have props this time.
Well, we'll see. We'll see how the rest of the episode goes.
All right. Kicking it off, episode 18, Chris Camillo, who of Dumb Money TV, right, who basically uses social arbitrage, using social media to find new investments. Huge humanoid robot guy. I wanted him to convince me that I was wrong. I don't know that he did it, because my big thesis with humanoid robots is we're going to have to wait a long time, and the wait's going to suck for these humanoid robots to be deployed. But what were your thoughts after listening to him make his case for why now is the time for humanoid robots?
Well, first things first, you made mention of it. The thing that stood out, right off the bat with Chris was how he said that he listens to almost zero financial media, and he really does it all, as he called it, the financial arbitrage, in TikTok, because using he spends about 4 hours a day just, looking at, data and collecting data that way, which just shows sign of the times, for retail investors and whatnot. But as far as, the robots go, he definitely, I think he thinks it's a shorter runway than you were thinking. But, I definitely, I don't think we talked about with Chris about the whole leasing option. That's one thing that, when we talk about, getting into the particulars of the robots, if you could
how
lease
much they
that
cost.
option, like it's growing. Yeah.
Yeah. No, and I think you're right. And one of the insights I gleaned from it here, we're showing this research from Pat Invest that the stack of technology that has to go in for humanoid robots is expansive. I think there's opportunities throughout this stack. I just think, the AI and the reasoning bit, the different chips and the actuators and different sensors and things like that. I think there's pockets of opportunity that you can make a ton of money beforehand, but I don't think we're anywhere close to Optimus robots taking over the world. But nevertheless, because we do believe in having both sides of the argument here, I think people should check it out. It was a great interview, very insightful. Chris spends tons of time deep dive talking with private companies, the CEOs that are involved in that. So again, very well worth a re-listen if you haven't listened to it the first time. But even if you go back, it's worth it. Next up was none other than the guys that kicked off our focus on the AI energy trend, right? Mike Alfred of Alpine Fox, probably one of, the most engaging guys that's on X right now. Maybe he makes some things up. He's a little sarcastic. If you follow his tweets. I was going to say,
he's kind of almost become a internet personality just through X. I believe he posts, every, I don't want to say 20 minutes or so, when he's maybe not traveling or whatnot, but he's posting a lot of, great insight, but as well as, personal stuff.
Yeah, I love too. You and I, he does these spaces all the time as well. So people, you should check it out. Like, this is the interesting thing. He's actually, some people give him grief that he's promoting some of the stocks, but he's an investor first, and he's made meaningful, like 6-7 figure investments in a lot of these companies that he's talking about, and then he's sharing his diligence, so I can't fault him for it. But he got us into IREN. He's on the board there. Eric Jackson had also mentioned that, but that whole space between Terawulf, IREN, Cipher Mining, Clean Spark, this is I said it in an interview that we did for The Upside that in the early days, I thought the bottleneck for AI was going to be chip supplies, but it's actually power. And Mike Alfred really drives that point home on why he thinks IREN's the best position, but why that whole space is critical for AI to really take off and realize its full potential.
Yeah, and Alfred has a little competition going, I think, there with Jim Chanos, doesn't he?
Yeah, man. Jim Chanos, a famous short seller who retired to just be, spew hate on X at people, just be bearish. But, they were doing it off. I think right now we're into round 3 or 4. I think Chanos might have won it recently, a round or 2 here just because of the recent pullback in IREN. But ultimately, I think it's going to be a KO for Alfred when IREN gets to realize the full potential of their business model.
Yeah. All right.
Speaking of this business model, right? Another great guest with Terawulf CFO, Patrick Fleury, who I'm actually going to get a chance to meet in person tomorrow. He's in town. But interesting enough, I loved his just very straight up approach to explaining exactly what Terawulf's doing in relation to IREN and the rest of the market. And he was just a humble, down-to-earth guy that's been there, done that before, and just gave some really good insights on that same space.
Yeah, and one thing I also noticed listening to his interview, and then as well as Paul Prager interview that we did with The Upside, they, I don't want to say the same things, but they're very convicted, and they're very, they sound very knowledgeable in what they're doing, and it seems evident. So
yeah. So here's the thing for people listening, right? If you looked at IREN versus Terawulf, this is the trend that they're both playing to, that there's a mega power need and there's a huge payoff here. But these companies are going about it differently. Terawulf's team, Paul Prager and Patrick Fleury, come out of operating and building power plants. That's their business. It's power, constructing steel and concrete. They don't get into the chips, whereas IREN is building the data centers and putting the chips in there as well. So there's a bifurcation there. There's the guys that are just saying, let us build the shell. the raw metal where you're going to house these data centers, and there's other guys saying, let's do that and everything else that goes in it. And there's more margin on the one on the right, but there's more technology risk on the latter as well. So important distinctions. If you're a shareholder, I'm happen to be a shareholder of both for different reasons. But as you're doing your diligence in that space, you got to know who you own, why you own it, and what's their track record.
All right. Next up was Eric Jackson.
This was your favorite guest. No. Is it Eric Jackson or Jonathan? No, dude.
Oh, Jonathan Faison. Yeah. Sorry. Jumping ahead.
I know. Seriously. Your favorite guest.
I love Jonathan coming on the show because he just brought so much and, all about the biotech space. But he just had he gave so much to, our viewers with his knowledge, his, different, stock picks, and I thought he was just a great overall guest.
Yeah, I agreed. I love he's the everyday man's, biotech is one of the hardest sectors to learn to be an investor, right? To be successful. He's self-taught. He didn't go to medical school. He's figured it out. He shares very candidly his wins, his losses, his victories and defeats, and he's been at it now for over a decade, has a community of just very well-informed investors that help him diligence opportunities. I just loved his humility and the fact that he was just real, right? It's an encouragement. If anyone here has been, we made a bold call that biotech was going to rebound this year, and we'll talk about that later. It was overdue for a payday if you just looked at the patent filings. But it's such an intimidating sector for most investors. But Jonathan is worth a follow because he'll give you all the confidence and encouragement you need that you can do it too, even if you have no background whatsoever in biotech. I mean, I think that was one of the best takeaways from his interviews. In addition to some of the stock picks he provided are doing really well, which is why we're going to have him on an upcoming episode again to talk about some of those winners that have more upside to them.
Yeah, definitely hopefully having him back.
Yeah. So are you jumping the gun?
I don't want to call the next person because I got it wrong the last time.
No, you got it right, dude. It's Eric Jackson.
Okay, Eric Jackson. Yes, Mr. Open Army.
Open Army. He got accused of being leading another meme stock breakout rally in Open Door, and it's really turned out to be the reality is he's got a hot hand, right? And there's been some pullbacks in these stocks, but I love Eric too. He's humble. He's super active on socials. You can learn from him, and he gives great stock ideas. So if you're looking for new ideas, new generation, Eric's a great source for that. And we were happy to have him on the show a couple times, even after technical difficulties, if you remember.
Yeah. And I think, specifically with Eric and Mike Alfred, both being so active on social media, as from a retail investor perspective, they're kind of sharing a lot of their it's personal and their personal, thoughts and stories, and they're being humble and honest. But it's, it's sometimes, I think, as you mentioned, people look down, would think they're pumping it or they're doing, sensationalized, type stuff. So I guess it's a fine line, but for me, I love the fact that they're just honest and they're, direct.
Look, but here's the thing, right? If you've done the homework, who gives a crap if you're shouting from the rooftops? This is a real company. It's a real deal. These guys are not there's other people out there like Citron Research, Andrew Left, who used to just short stocks and then use his appearances on CNBC to push them down, and then he was trading out. Yes, I've read the SEC investigations against him and can say definitively it wasn't rumored that he did that. You could actually see his trading logs, the days he was going on and saying Tesla's a short or what other companies he was targeting. They were actively trading the opposite of that to profit from it. But that's not what Eric is doing. That's not what Jonathan's doing. That's not what Mike Alfred's doing. They're passionate about something. Don't we want people to be passionate and get behind it?
Absolutely.
Yeah. Alexander Castro, 2356. What do you guys think of the future IREN? And good afternoon. Good to have you, Alex. I love the future for IREN. I think, yes, there's some more risk there. If you're talking about buying new chips every 3 to 4 years and what's the value of those chips and can you reuse for a longer period of time. But I think this whole AI energy space is going to have a great 2026. It got overheated, perhaps, maybe a little bit ahead of itself in the last few weeks and months. You saw this huge run-up going into November. I mean, look at IREN. It was sub-20s back in July and then went all the way, to $80 a share. So those were good times. They weren't too long ago.
Come back.
Don's
Definitely come
daydreaming.
back.
I caught you, dude. You were just dreaming off. And then Eric Jackson too. Like he talked about IRN. So both of those interviews well worth watching, just for insights. But thank you, Alex, for joining the conversation. That's a reminder to everyone watching us now. You're watching us live, and you can join and change the direction of the show a little bit. Is Exxon a good investment in 2026? I'm partial. I think I don't want to pick any one of the big super majors in terms of oil and gas and energy. I would just play the sector ETF, the XLE. That's the best way, in my mind, to capitalize on the undervalued energy sector. And then obviously I work for Prairie Operating Company, a small oil and gas player in the DJ Basin of Colorado. I think small caps is another way to play the energy boom if you want to take a bit more risk. I think there's actually an ETF that is small cap oriented for energy. I think the ticker is PSCE. So it's another one to look out for.
All right, good questions.
Yeah, I know. So rounding out the list for our best guess, I think this was our top guess. You may disagree.
Yeah. Well, I think so too. Just from a engagement and audience perspective, I absolutely think so. Beth came on and talked about her, forecast for Nvidia, being a $20 trillion market cap, potentially.
Which sounds ridiculous, right? But then she gave an explanation that was so reasonable that they needed to grow, continue to double in size and trade at a 25 times earnings multiple for the next 2 to 3 years. Not that difficult to get, based on history.
Yeah. And,
so,
I think
big, bold call.
I think you when you were talking to her about it, it could, you were even saying yourself that it could go higher than that potentially.
Yeah, which is crazy right now for anyone to think about that. We sound stupid saying like Nvidia to 20 trillion when, the whole AI trade is kind of on its heels right now. But look, here's the thing. Look at Nvidia's results. This is a company, the largest company in the world, that reported quarterly earnings and sales growth of more than 60%. I think sales were up 62%, earnings were up 67% for a $4 trillion market cap company. Like, they're not supposed to grow that fast. If you look at Apple, that was the knock against Apple forever, was that, hey, it's too big, it can't scale. And they weren't growing as rapidly on the top and bottom line. So Nvidia is not, here's the thing. I think Walmart trades at 40 times forward earnings. Nvidia trades at 23 times. And we're in an AI bubble when Walmart trades more expensively? I don't think so.
Sounds kind of silly when you put it that way.
It does sound silly, but here you look at the chart, Nvidia over the last year, 5 years. This has been on a phenomenal run. The pullbacks, as all stocks do. So again, last episode we said the way to play the AI trade, if you do nothing else, is go long Nvidia, go long Alphabet. So Beth Kindig making a really good case for why Nvidia's got to be a core position in your portfolio. And here's the thing, her performance stacks up. This is what was so impressive to me. Put her performance up against the top hedge fund managers, and she does better. So results matter, as one of my mentors said, and no results I've seen are better than hers. So go give her a follow and subscribe to her services, or just pay attention. She puts out a lot of good content as well.
And definitely watch that video.
All right, those were the best guests. Now we get into our best and worst calls of the 2026, or 2025. But before we get there, we want you to subscribe on our YouTube channel. We're trying to get to 2,000 subscribers before the end of the year. We're well on our way. If you remember, not long ago, about a month ago, we were at 1,000. So we were trying to get to 1,000 for my birthday. We just missed it narrowly, but I know. Oh, so sad. Give me a belated birthday gift and get me to 2,000 before Christmas time. So follow us on X while you're at it as well. We're sharing content there more frequently in between episodes, sharing interviews that we're doing as part of our sister publication and broadcast, The Upside. Also sharing insights as the markets are unfolding, stock ideas, you name it, reactions to bad calls, good calls. But in any event, you know where our socials are. Please go follow us there, support us. That's the best way to help us grow our audience and our reach and get even better guests on as we expand in the new year. So with that being said, one of the biggest things that's going to help us, I think, is actually being right. You can only be wrong for so long before people start tuning out. So let's cover the best and worst predictions by the big skinny, and the ones that were wrong, I'm 100% blaming on you, Dodd. They're all your fault. I should, as the intern, I had shitty research from my intern. That's why it went bad. But all right,
I'll stop begging you to take my ideas then.
All All right, let's go through these. Again, I noted some of them. We're not going through all the things we got right because a lot of things worked out well this year, but we did bang the table on a certain number of predictions that most people thought we were a little bit crazy for at the outset. Do you remember what, from your recollection, Dodd, what do you think was the one that I went the most adamant about? Let's start with market calls, right? So just broad, general-based economy, market. Anything stand out to you that you thought we were pretty adamant about?
I think mostly about the recession, that we're not in a recession. I think that, to me stands out the most. But
yeah, I think for me, it was just arguing against the tariff tantrum, that the stocks, the end of the world was coming because these tariffs were going to be put in place, and that Liberation Day was the beginning of a nasty, prolonged bear market. We showed this chart back then that was basically showing how reliant China is on the United States, and that they couldn't make up the difference for a 77% drop in exports to the U.S. by shipping those, whatever those products were. Like, we can say some of good quality and some of inferior to the rest of the world. And that's exactly what we saw happen. Saw China trying to offload their goods in Latin American countries, but they couldn't do it enough. And lo and behold, Xi Jinping had to come to the bargaining table to talk with President Trump and figure out a path forward. And the markets really reacted positively once that inevitability became real. So we were right that the tariff tantrum was completely unfounded. We were also right, as you mentioned, about the recession, but also sentiment. I want to talk about sentiment before we get to the recession call. We shared a lot of different sentiment readings to try and educate the listeners. Like, hey, listen, when everyone thinks alike, everyone is likely wrong, to quote the great Humphrey B. Neal. And here we showed where bearish sentiment spikes and what happens to the market afterwards. And it's up and to the right. There's only been one or two instances. If you look back in the 2007, right before the financial crisis, there was that one spot where bearish sentiment was actually wrong. Everything else was a contrarian indicator to go long and keep buying stocks.
All right. You don't have anything to add there, Will.
Yeah, you don't. Don't trust your gut. If you're negative, it's probably a good time to buy. That's right. The other Wall Street adage is, right, buy when there's blood in the streets, or Warren Buffett, be greedy when others are fearful and be fearful when others are greedy. But the other thing was liar, liar, spending on fire. There's a lot of mainstream press news that starts talking about consumer sentiment. It's in the tank. It's tanking. That means the economy is going to roll over. Here's the thing that refutes that every single time. Consumers basically say one thing. Hey, we're down in the dumps. We think the economy and the outlook sucks. We're not really optimistic about the future of our jobs and wages. And then guess what they do? They say one thing and they do another. They just keep spending. If you look at personal consumption, and that was always the tell. Now, I would freak out if consumers start saying they feel bad and start acting like things are bad, where consumer spending drops. So again, it's always data driven. That's what we do here at the Big Skinny, is forget the headlines and the feelings. Let's focus on the data.
It's like they're talking with their feet because they're actually spending money. I think if you give, people a survey or take a poll, they're going to give you the answer maybe you think you want, but they actually go ahead and, are spending money, So.
Yeah, exactly. And then same thing with the recession, right? I actually penned an op-ed for Newsweek, back in June of 2023, saying we're not headed anywhere towards a recession. And that still rang true this year. Because if you just looked at the fundamentals, if you looked at earnings growth, you looked at balance sheets of, household balance sheets, right? Everyone made a big stink about total credit card debt. But if you looked at total assets towards total liabilities, we had never been in a better position. $20 trillion in household assets versus $10 trillion in liabilities. It's a lot of wealth that was created. We weren't going to a recession, even though the markets and the headlines kept saying, even to this day, recession on, recession off, recession on, recession off. Sorry, folks, that's just not happening. I'm not saying we're never going to have a recession again. I hope it's not for a while. But when we do, I think the state of the economy is such that it's going to be a short-lived recession. So.
And anytime we can get a Karate Kid reference in anywhere, it's always a good
sure, dude. It's long. Karate Kid and Tommy Boy for you. I think that's, top of the list. But other market calls, retail, right? Retail, we said that retail investors were going to be a more important component of the everyday markets. That's why we started this show to begin with, to educate, to inform, to participate, to collaborate with everyday investors like our listeners. And we've seen that. If you look at their average share and performance, you saw through the April sell-offs that total retail participation market share in the market was above 30%. And guess what happened? We kicked the butts of the hedge funds. If you look back at this chart we put together in April, the average hedge fund was only up 1%, the average retail investor 15%. So much for dumb money. The smart money looked pretty dumb this year by not buying the dip every step of the way. And I think this is a trend that continues into 2026 for sure.
100%. Retail revolution is real.
It is. It is, absolutely. All right, so from market calls to actual investment calls, I mean, we got some things really right. We're going to end on the things we got wrong. So let's go with stock calls. AI, X, and Nvidia, right? We had an entire show, two shows that were dedicated to top stocks not named Nvidia. You tallied the results. Sim was the boldest from you. Yes, Chad, it was a big, bold call. I think we're going to bring up the performance of Symbotic. At the time, it was trading at about $19 a share when we first started talking about it. Only up 89% as of Friday's close, but it got over 100%. But Teradyne, 143%. Remember, this is the company that I proposed as the better robotics play than Tesla because they get 16% of the revenues from robotics, from commercial robotics. They're a test and equipment manufacturer. They test chips. They make sure they do what they're supposed to do. Up 143%. I don't have it in front of me, but I can look it up while you tell me something about these stocks that you thought stood out to see what Nvidia is up this year, because Teradyne may have trounced Nvidia. Year to date, Nvidia, 31%. So we smoked it, right? So if you look at the top, Tempest AI is kind of the cutoff, right? Everything above Tempest did better than Nvidia. Not saying you shouldn't have bought Nvidia. Nvidia had a good run.
No, absolutely. And, a couple of them, we switched out a couple episodes ago, a couple weeks ago that we, marked, Wolf being one of them. We took the losses, right? Oddity was down about 40%. So we got that one wrong. But here's the point, right? What's it matter? Why are we bringing this up? We're not just, tooting our own horns here. I think the point is when there's a big trend in the markets and there's going to be an established leader in Nvidia and Apple and Alphabet, there's going to be a whole subset of other companies that do really well too, riding the same trend. And it's important for us to find those opportunities because, like we showed there, you can outperform Nvidia by finding those, what I called first derivative plays on the same trend, right? So Nvidia is the leader. What's the next level of companies that are operating in the same space, benefiting from the same trends? Mm-hmm. So we got that right. Apple, this is getting chippy with it's a good chart because I think it just underscores all those stocks that were on the previous slide are building off of the chip trend, right? Like semiconductor total shipment volumes, we're going north of 600 billion for revenue, close to 2 trillion shipments a year that it's going to be there. I would say this, it's a line that I've said before. Chips are the new oxygen of the digital economy, right? If oil was the oxygen of the physical old school economy, it's now chips. Everything's got semiconductors in it. 100%.
Are you willing to get a semiconductor in your head? Are you a Neuralink guy? Would you do that, Elon Musk?
I'd need a little more information, but I definitely would think about it.
Really? Have you watched the series Severance on Apple TV?
No, I haven't.
You might want to do that before you think about being Neuralink. So,
true answer there is probably no. But
So not going to ruin that for you. So,
but if it's going to promote me into the A block, then maybe I'll think about it.
Oh, all right. So there are conditions. You do have a price that you'll sell out for. All right. Chip him, guys, and he'll be here next Monday to download the things that I've forgotten. But Apple, I've called my ride or die stock. I keep saying this, innovate or die, not hardly. I always say they just have to iterate, not innovate. And I get brutalized every time I say it because they're like, that's the dumbest thing you've ever said. Of course, they have to innovate. No, they don't. Their businesses and their business segments are so big, and their install base at 2.4 billion devices doesn't necessitate them to come out with the next greatest and latest thing. All they got to do is come out with something incremental that everyone spends a little bit more on, and they make literally tens of billions of dollars more in profit.
Now, Apple's been in the news recently, Lou, just about, losing execs, and then also about, not being at the forefront of AI. What's your take on both of those things? So
losing the exodus of executives, I think, is instructive. I think you don't have any strong leader there. I mean, Tim Cook's a great operator. He's not a Steve Jobs, an iconic leader that's going to keep the top talent there. But yeah, the whole argument that they're behind in AI was the rub maybe 4 or 5 months ago. But then all of a sudden, Apple re-rated. It had a huge rally because everyone thought they were going to catch up. I do think that's the big threat to Apple's dominance is how do they handle AI? You remember not long ago, they announced a partnership to start working with Alphabet's Gemini to really use to augment until they get their own AI off the ground. I would argue that Meta and Apple, there's absolutely no need for them to be developing AI in-house because they're not trying to solve the world's problems. They're just social media and digital media companies. They should just license their AI platform from one of the other bigs that's, you know, can spend and innovate much better than they can.
Not shaking in your boots at all.
No, look, it's a ride or die. I've owned it since $43 a share, so it's going to take a lot to convince me that Apple's going to suddenly go away. I mean, it's a great company. I mean, I probably in this room here and among your room, there's probably 10 or 15 Apple devices, right? So not going away anytime soon.
Yep.
All right, what other people did think was going away was biotech. They were in the doldrums. Too many companies got founded through the COVID days that were science projects. But what we saw was more mergers, more money, and takeover premiums coming back. We were dead right with this call. XBI, which is the biotech index that has smaller companies, and the IBB is the one that is the NASDAQ, bigger biotech companies, both up more than 25% on the year after selling off. Like, we nailed this one. I think this is the one I'm most proud of and most happy about because of I love focusing on this area of the market because it's a double bottom line, just like Jonathan Faison said. You're helping fund companies that could return a profit, but then also cure really nasty diseases, right? So giving people life or extending life, not bad when your investment can help contribute to that.
And I know we're doing our predictions, you know, at a later date, but, you know, biotech for 2026, still feeling bullish about that.
Love it. Still think there's a lot of ways to go. I think this is, you know, trends that just because we turn the calendar to another year doesn't mean all these things that are working all of a sudden stop working. And I think that's the key point. You mentioned it, you teased it. We're going to have a predictions episode January 5th of next year. We're going to come out with our 6 top predictions for 2026. That's why we're going through our big predictions of 2025 to give you reason to believe. Biotech, it'll be back again. What about small caps? That was the other one. I was banging the table so often on small caps and was early. And as one friend always points out, early has the same number of letters as wrong. And I was wrong for a while on this, but no, small caps bottomed. IWM, even microcaps, the IWC. And we saw it coming again, data driven. Remember this chart, no Wall Street love for you. And it looked at microcaps and small caps and the average number of analysts that cover these stocks, the percentage with absolutely no coverage, and how they perform over the long term. This is the last great bastion of opportunity and alpha for everyday investors. And I think that's what we're, you know, figuring out this year. A lot of these big winners this year have been in the small and microcap space.
Yeah, small caps have definitely finally turned around and done.
Yeah,
well.
And you know this because you've been investing with me and you've largely done your thing, but it's also small caps and microcaps. So you live by the sword, you die by the sword. It's painful when they're out of favor, and it was it took 4 years before they hit a new all-time high, right? So it was 2021. It was almost 4 years in between all-time highs. So it was a long slug for small caps. So, all right.
And you never gave up on them, Lou.
I didn't. The little engines that could. All right, let's focus on what we got wrong. Totally screwed the pooch on.
There was nothing wrong.
Yeah.
We didn't do anything wrong. We don't do wrong, Lou.
Son, if we ask our wives, they'll tell us that we do plenty wrong. I can guarantee that if we got them both on.
Luckily, we didn't
right
invite them to the show today.
That's right. No, listen, this is a funny thing, right? It's atypical on Wall Street to be humble. This is actually a chart that I love that we did, is what CEOs say sorry, that they were wrong. Use the words, right? Look at this. We're talking about the number of mistake words that appear in quarterly reports and shareholder letters. It's very negligible, right? Like Warren Buffett and Jamie Dimon kind of top the list here, but like if you just look across, it's not a lot. Guys don't like to say, hey, I got it wrong, but here's why I think we're going to be right, or here's what happened. But we're going to do that. Yeah. Starting with Bitcoin. We told people when we got convinced by Anthony Pompliano and other Bitcoiners that it was the sign of the top. We were the latecomer, the sucker to the table. We bought into the seasonality that Oktoberfest was on its way. And Bitcoin did have a big rally, but then there was a huge risk-off moment. You saw a lot of altcoins get liquidated, so it just took the momentum out of the Bitcoin and crypto market. I can't remember the exact stat, but it was something like 2 million crypto traders got completely wiped out in that freak sell.
30, like just no time at all, just gone.
Yeah, gone.
I think that, Lou, honestly, probably just scared so many people, especially, on the retail, investor side, that's that'll do it, you know.
Yeah.
Luckily, I'm still not invested in crypto. I don't say luckily, but you know, maybe someday. But you know, that definitely, you know, gave me pause.
Yeah, well, now's the time to buy, my friend.
Yeah.
If it's down and out. But no, look, you play stupid games, you win stupid prizes. You buy these coins that absolutely have no utility, no real world value, and you use 20 to 40 times leverage, you deserve to be blown up. Like, I'm sorry, maybe that's a little callous, but it was a necessary gutting of that sector of the market that's going to really, I believe, over the long term, you'll see Bitcoin, Ethereum, maybe Solana, a handful of these cryptocurrencies establish themselves as the dominant players that get used, and price goes up just because of the supply versus demand imbalance. So we were wrong about Bitcoin. We timed it. We were the classic example of hot dotting and chasing performance, and we jumped in right as the market essentially topped.
Would say maybe, you know, there's a few more weeks left in the year. Maybe it'll turn around, but I don't think it's going to go that fast.
It could. I mean, look, this is one of those assets that doesn't, you know, the trading never stops. It's open 24/7, 365. Not saying it's out of the realm of possibility, but I'm just owning the fact that we timed it really terribly, but not bailing on it. I haven't changed my mind that I don't all of a sudden believe in Bitcoin again. I still believe in it. I think it's just going to take some time.
Still there. It's just the value at the moment.
Yeah. Energy. I watched Landman. I switched jobs, changed industries. I should have, it hurts to admit it. I was wrong and Jim Cramer was right. But It was, man. He came out, made this bold proclamation maybe 3-4 months ago that he sold everything, oil and gas. You know, the energy sector as a whole, I think, was up a middling like 3 or 4% this year. So it wasn't a total loss, but I expected a much bigger boom. So I'm going to own this as a loss, right? We was wrong about it. I think you're going to see in the next 6 months, the stage is set. And we had some interviews with Rick Rule, which got a lot of attention, and from the guy from Bison, who is saying, like, look, gold usually moves first, then silver and copper and oil follows next. So you've seen huge runs in those commodities. I still think oil is going to work out, but it just didn't work out for us this year.
Yeah, Chad Towers is typing right now. He's typing his message right now. One's coming in. I know it.
Dude, that's the best comment ever, because yes, Chad and his loyalty and support with us at Prairie, I got to give him a thanks for that. I am confident of what we're doing. All great guests. There it is. Get you some more followers. Big value from the big skinny is my call. Chad, we appreciate you. You better stay tuned for later in the show, because there might be a special shout out for you, Chad. Hood, yeah, Robinhood, I haven't really bought into this yet. I mean, I missed it. It's one of those things where you see the stock running. I get why it's going. I just hate chasing things. And I felt like Robinhood got caught up in just this retail trading boom and would switch from crypto generating the most of its revenue to equities and margin. And yeah, I missed it. I mean, I missed Hood. So add that to the list of bad calls. I didn't say buy Robinhood. It was an obvious buy.
Yeah. We didn't.
Yes, Chad winning for comments of the year. Kramer's such a knucklehead. Thank you for not getting shaken out of prop. I'm hopeful and personally invested right alongside you that it is well worth it. So join the conversation. As you can see, we're letting the audience share questions, comments, criticisms, everything. We take it all. Cue up the Pat Benatar. Hit us with your best shot as we continue reviewing our best and worst calls of 2025. And then we're going to get in a moment here as we go through in the last 10, 15 minutes of the show. I think we got some awards. And Chad, you should stick around for that. Instead, let's go to, a bad omen was me saying, I don't know why. Like, people think I hate Elon Musk, that I just want to see him fail. You
just want him to follow you on X.
I do. I just want him to follow me on X. Elon, if you're listening, or anyone has it. But look, my dig against Tesla this year was that everyone was parading them out to be the future of robotics, humanoid robots. This was the trend, and it's just a one-trick pony still, just like Meta is an advertising one-trick pony, just like Amazon was for a long period of time simply logistics before AWS launched, and even Apple was a one-device pony. Tesla, generating 85% of revenue from electric vehicles, does not make it a humanoid robot company, especially since the other 10% ish comes from solar panels and their batteries for grid storage and behind the meter storage, and they generate literally $0 of revenue from robots. But lo and behold, I was wrong. Tesla's done pretty well this year. It's not had a bad year. The future is promising. Everyone's buying into the hype of humanoid robots, and that's what I'll give Elon Musk credit for. Always have. He is an incredible salesman. He followed Glenn Ross. Always be closing. He's convincing, right? His timelines might be off, but he gets people to buy shares. I'm just not one of them.
Best scene of all time, Glenn Ross. Yeah. Always be closing.
Steak knives for you, my friend. Steak knives. All right, CoreWeave. We warned about IPOs, and we use CoreWeave as kind of the poster child, right? Historically, IPOs are a crappy investment for everyday investors like us that don't have access to the IPO price. You look at this performance chart. The key thing here to take away is just to see that when you get out 5 months and 1 year, about anywhere from in that time period, more than 50% of companies that come public are down, trading below their IPO price. So that's usually when I like to get interested, when the company's been in existence for 6 months to a year. You get past the insider lockup period, and that's where valuations get compelling. We suggested that CoreWeave would face a similar fate, and the thing just went rip-roaring after it came public. And yes, it's pulled back considerably since then, but I want to say it came public at like 38 and somewhere around the 40 and ran all the way up to 90. And yeah, we were wrong about CoreWeave. And look, I think they're being a major player now in that whole AI energy trade, even though they're operating as a neo cloud. So they're trying to do all things and integrate as much as possible. To be determined. It's not in my portfolio right now, but it's back on the watch list after missing out on a big run for sure.
Well, if I do my math, there was 8 things that we did right and 4 things that we did wrong. Not that there's not more on either side, but that we
were right about cybersecurity. We were right. Yeah, you're right. So we were right about more than we were wrong. And I think that's the balance that matters, right? And here's the other thing. As investors, remember, you don't have to be right all the time. You could be a Hall of Fame baseball player and only hit 3 out of 10 times, right, that you step up to the plate. It's the same thing in investing. As long as you don't put all your investments into one of your highest conviction names, you can be wrong more than you're right and still come out ahead. The good news is we're right more than we're wrong, at least for 2025.
And let me emphasize, most importantly is do your own due diligence, just because what, is said on this show or any other, show or social media or podcast or whatever you watch,
yeah, disclaimer Dodd now. Look at you putting on the legal eagle hat as well.
This is not financial advice.
It's Lou diligence, not due diligence. Come on, we had a segment like that was based on it. I did get my Coors play off. Well done there. Yes, we have winners and we find losers. So Chad, man, gosh, if I needed a hype man, I got him. I found him. Chad Towers is the Lou Basenese personal hype man, You are a good friend of the show and a good man indeed. So, all right, with that in mind, I feel like we got to skip ahead to his award just to make sure he's here. He's for it. But
he's not going anywhere. What are you talking about?
Yeah, all right. Well, listen, those were the best predictions and worst predictions of 2025 and a little preview of what we expect in 2026. Now we wanted to go through and have a little bit of fun and award the first ever Skinny Awards for all sort and manner of things. Mr. Dodd, man, I'm going to let you lead this because you are the creative genius behind the Skinnies.
I think it's time I had to put on my tie for the award show, Lou.
Man, you're all grown up in the course of the year. The D block is you're dominating it now with your tie. It's where you lived for a long time, and now, man, you're gonna have to be a regular. B and C blocks.
Absolutely, let's do this. But yeah, it was time to put together. Why not have our own little award show? And sure, we may have picked these ourselves this year, but maybe next year we'll get into some,
You're saying there's bias? No award shows. There's no bias in any award shows.
Definitely opinion and bias in our show, but put together a couple different superlatives, some different awards, and let's get to it. That's what we got. So, game special segment, the most entertaining, reoccurring, one-off gamer segment. There's a bunch of these things.
Dude, I know where we're going. I know where we're going. I'm so this will be 5 years down the road. It could still win. Yeah, Dodd does love a game.
I love a good game. If you know me in my personal life, there's games all over the place here in my family. So some of the nominees, we did. There was
because I was in France twice. Yeah, Blues Clues. Because I was in France twice. You were trying to see
France. And then, segment, we did Robot Wars, did a bunch, but, there's only one winner, Lou, and it was your favorite one. You told me over and over how much you loved it. Is it crypto or crap? That definitely was the best game.
It was such crap, dude. It was such crap. Sorry.
No,
it was
those were uncomfortable.
Coins. It was like someone pooping in front of you. It's uncomfortable, dude. It's not. It was like you just towed the line where we can never go back. So, folks,
what, just because there was a couple, altcoins that you didn't really like the names of? I mean,
they were just a little. They made me blush. Maybe I'm the prude. Maybe I am. So anyway, all right. This was
our viewers don't know.
Winner.
Go back to episode 4 and watch episode 4.
Yep.
Jump to the end if you want to just see the game, but
you want to see me get uncomfortable on air, which rarely happens. So yes, this was an undeniable winner. All right, What were you thinking? The worst take, idea, or decision during an interview or segment? Do we have screenshots here or what?
Oh yeah. So there was several times that we had to ask Lou, what were you thinking? And one that comes to mind was, let's do a live show from, our hotel room in Paris.
Oh, yeah. But that wasn't the winner.
What's that?
That wasn't the winner.
No, that wasn't the winner. Yeah. The boys jumped ahead a little fast on that one. But, and then there was obviously the Rick Rule episode, which,
20,000 views on YouTube and counting right now. And the most common comment is, Lou, shut the hell up and let these guys talk.
Why do you keep interrupting the guest? This is unwatchable. Why can't I don't understand. I thought you did a great job, Lou.
I did too, but the tension that was behind the scenes, I mean, I'm explaining and rationalizing, was these guys were in a hotel at a conference in a hotel lobby with a laptop battery that was dying, and we were just trying to tease out as much information as we could. So I was trying to rapid fire, like, tell me more. What about this? What about that? And I'm being ridiculed vehemently online for interrupting too much. So.
The other one that made the list that, wasn't a winner, but was your decision for your the headphones and members only jacket look that you did on episode, I think it was 5.
I don't
remember that.
Oh, my.
Oh, wait, there it is. Yeah, I think that was a what were you thinking moment.
I think, dude, I look like the old IPO Buzz character that you created, dude. What the heck?
Yes. That was, I think that was a remote show when you were in Jacksonville or something like that.
Yeah, it was. Yeah, Trump's tariffs wipe out nearly $2 trillion. I wish they'd wipe out the archives of that show, man. Goodness gracious. Not a good decision on my part.
Yeah, but that's all right. It wasn't the winner. Rick Rule, interruptions per the audience, definitely.
Yeah, the audience has spoken and I am an interrupter, so I need to stop and shut up. What's next?
Yeah. Pick of the year. Stock pick of the year.
We did. Chad talked about Symbiotic. That looked like it was going to be a really good one, but I got to be honest here. I'm most proud of the Alphabet. What was the boldest call? Was Alphabet back at $135, $140 a share in April, when everyone was like, these guys are going to get antitrust lawsuits settled against them. AI is going to eat up and destroy their business. And this was the perfect cartoon that illustrated this. Back at $145, no one wanted to line up to buy shares, but at $225, sign me up. I mean, the stock's now above 300 and we were banging the table. I said this was my favorite analogy of the year too. I said the Mag 7 is like a boy band that broke up. You got to bet on individual careers. And this is the Justin Timberlake. Alphabet is the Justin Timberlake best breakout career of the Mag 7, and it's been the best performing stock this year.
Still banging the table?
No, I mean, the stock's more than doubled, right? So I think it's still a great play. I think it's undervalued, but it's traded back. It was trading at 22, 23 times forward earnings. It's now up to about 29 times, and it basically flip-flopped with Nvidia. At the time we were banging the table on it, Nvidia was trading north of 30, 33 times forward earnings. So yeah, I think Alphabet could get to that type of premium valuation from the current, at 28, 29 to maybe 32, 33, but it's not a screaming buy, but it's still a good buy.
Gotcha. All right. Well, the next one up is obviously one of my favorites, which is show me the funniest on air moment. So we've had a couple of those. We've had that I can, came to mind instantly. One was when we had a special guest that just couldn't find the camera.
Watch how you use special, my friend.
No. He was a special guest. He was a guest that couldn't find the camera. That's all.
Yeah, it was a little bit off-putting. I remember being in the studio here. We're like, what is, do you have a second camera? Is he looking? It was just like this and just off to the, yeah, we were all confused. And I wanted to scream, look at me, but that would be even more embarrassing. Yeah,
and then we had, the sign falling off the wall in the studio there. Luckily the boys got that put back together, so that's good. And we had a few of them. The boys did mention to me, and I don't remember this, but flip me over like a pancake. Do we remember this?
Man, dude. Yeah, that was the week I think we ended. What was the name of the game? I've totally forgot. Lose Clues, where you would give me random words to work into the episode, and pancake was on there, and I got forced. And
okay, now it makes sense. Yeah, didn't remember that. Good, but the one that won was I thought one of the funniest moments. It just happened to be a time where my internet at home ran out, was not working, and I had to run across the street and just find a place to sit that had internet, like literally last minute. And
I remember this. They were doing like an
literally
episode of
as I went on
Loser
there and you
behind
came to
weren't
me.
they?
What's that?
They were doing an episode of The Biggest Loser behind you, weren't they? Like it was like people running behind.
I'm sitting outside stealing some internet and everything's quiet, and literally I come on, and right at that moment the door opens and a bunch of a whole CrossFit team group just comes running, doing laps on the sidewalk right next to me.
So classic. So episode 7, if you want some entertainment, go there, because you were definitely in
early episode. That was funny. That was definitely funny.
Comes with the territory. All right, fan of the year. This is the best award. There's no argument here. Chad Towers, come up to the stage, make a speech, my friend. You have been the most loyal, fervent supporter of the Big Skinny. You don't need to do anything else to support us. You don't need to go spread the word anymore. You've done all you possibly could be expected. Man, we may even ship you this. We're going to have this made. I think we AI generated this trophy. Maybe we can 3D print it and send it to you. So email us. Actually,
either that or maybe a T-shirt or something, Lou.
Yeah, no, it's Chad, do this. I think we have your email address, but make sure we do. Email us your mailing address. We got a special gift coming your way for the holidays. We want to thank you personally for being such a big supporter, honestly.
There you go. Yeah. And I'd like to do a special honorable mention, Lou, to Kite Surfer, Violator 2020.
Violator 2020, yeah.
And Prince A. Those are 3 names that came to mind that, have
Prince doesn't count. I played football with him in college, and he kicked my butt and caught no, he can't win.
He doesn't count? Okay. Well, again, honorable mentions, But,
Chad, no, we're very thankful. Look, this is the whole reason the live stream, and as we grow and expand, big value via the Big Skinny. We'll do on the mailing address. Thank you, Chad. You are most celebrated here in our Big Skinny world. But honestly, this is why we're doing a live stream, so that we can interact, engage, collaborate, and over time keep growing the community. So if you're watching this live or watching this on a replay and you've enjoyed, please share it far and wide. We do not shy away from any hard topics or shy away from doing and saying dumb things either. So it's entertaining and informative, hopefully.
All right. Well, next one up, image of the year. So this is just, this
is you creating an award for yourself, because you're the designer here. You do all.
I do want to say that you suggested this one, so let's make sure that you did have some say in that. But yes,
I did.
We do a lot of images that obviously try to convey a message, and we gave it to the pair of tantrum child and child.
Yes, child and child, the Trump child and Julia child. That was such. I still see it and just laugh immediately. So well done, my friend. Great combination, completely unexpected. And you deserve a lot of props for doing all the imaginative things you do with our creative here. So thankful for that, because I certainly can't. And AI can't either, folks. It's not there yet, but it's getting closer.
It's clearly getting a little closer.
All right, we're down into the waning minutes of our 33rd episode, 32nd episode.
This is what I like to call the Larry Bird episode. This is our Larry Bird episode.
It is our Larry Bird episode.
Yes.
Yeah, and we got one more award.
2 more awards, actually.
2 more awards. All right.
This one, mic drop moment. So this one I find a little bit humorous too, but this is honoring the boldest on-air moment that left us speechless. And this, there was no competition. There was no others. How many? It was just Dan Ives' interview from the car in the tunnel.
Dude, he was going through the tunnel. Like, he was like, yeah, I'm going to join a live stream show from my phone, and I know I'm going to go through a tunnel, and I don't care. Like, that was just epic move. He just doesn't care. He is who he is. I love it. We'll have to get him on again, too. I want to sit down and have an interview with him. Like, I'm curious. I was thinking about this on the way over here about getting him back on, because he wears the loudest clothing ever. And like, how did that trend start? And more importantly, he couldn't be anything but bullish. Like, you couldn't wear clothes like that and be like pronouncing negative things to happen. It's just such a upbeat look and appearance. And he's been very right on most every call. Yeah.
And to be fair on his, his commute there, I think he was on the way to a CNN interview or something like that. So
you're saying CNBC, dude? CNBC.
I don't know.
CNN. Come on now.
I don't know. It was an interview that he was going in person, and I guess the good thing is he kept his word, and he called in for us. So that props to Dan.
Agreed.
All right, the last one is the episode of the year. I'm gonna let you do this one because this is the fruit of all our labor, but you specifically pulling all this content and great stuff together. So
listen, like, the people vote on here, and I can't argue with it. You can't pretend what were the best episodes. I mean, I think the birthday episode was my personal best, just because I'm not used to having people celebrate me like that, and was very thankful for it, for everyone here in the studio, not in the studio, but. At the end of the day, Eric Jackson wins the day. The best episode of the year was episode 24, Bubble or Breakout. Had the most engagement across all socials. He is becoming just a mainstay of the retail movement, a leader of the retail army. And look, I think it's well earned. He's put in the homework. He's done his work on all these companies, and he's reaping the rewards as he shares that broadly with the rest of the market. And I think that's great. Like, he runs a hedge fund. He's not out there trying to raise tons of money for his hedge fund. He's sharing his information and his research widely. And if you choose to be a customer of his, awesome. If you don't, he's okay with that too. So. Episode of the year, Eric Jackson. So we're going to have to see if we can get him back on, maybe see what he's thinking for 2026 and how things settle out at the end of this year.
Yeah. And if anybody has different opinions or different ideas, hit us up on social or email us or whatever. Let us know. Definitely give us some feedback.
Thank you for the feedback. Thank you for watching us in 2025. We have one more episode that we're going to bring to you. It's going to be our 12 stocks of Christmas and Hanukkah before the year is out. This is not the last episode of the year. We wouldn't do you like that. We're going to end the year with at least 12 new investing ideas that are going to be pooled from some of my fellow friends that share the media waves with me. They're 2 top conviction stock picks for 2026. So tune in. We will be broadcasting that next Monday at 5 p.m. live for you here at the Big Skinny. I want to thank, too, the 6th Man Award goes to the guys at the studio here. Taylor, Dan, David, because they do the hard work that you and I couldn't do, man. We can't even push a button and make it happen. So very thankful for them broadcasting us to the world and to you, into your homes, into your mobile devices, wherever you may be. Keep watching us. One more episode to go in 2025 and big things to come in 2026, both for this show and our investments. So Lou Basenese signing off with the Big Skinny.